Time now to get a more in-depth analysis of the markets. We are joined in our Cape Town studios by Piet Viljoen. He's from RECM. Piet, good to have you with us. So we know that you're a resources bull and a resources fan from a deep value perspective, but let's get your views on the oil price. It doesn't seem like it's a dead cat bounce anymore.
Yeah, I mean, nobody forecast the decline in the oil price, and of course now everybody's forecasting oil price to decline substantially forever. And I'm sure that's also going to be wrong. I think it's very hard to predict short-term movements in share prices, in commodity prices, and and by definition the oil price as well. I think over time the price will move to create a balance between supply and demand, and that price point is roughly around where the marginal cost of production is, because at $120 a barrel of oil, people are extracting oil from shale and all sorts of very expensive ways of getting to oil or gas, and at $40 all those things become sub-economic and get closed down, which reduces supply, and then over time we should push the price back up to where it becomes lucrative again to explore, discover, and exploit new resources of oil. So the price acts as the balancing mechanism between supply and demand, and I guess that over the next 5 years the price will settle somewhere in the region of $70 to $80. That would be our guess at RECM. Whether it's going to happen tomorrow or next week or next year, it's hard to say.
Piet, on the specifics of action today, we had Avenge financial results out. The share price ticked up by 5% on these pretty ordinary numbers. Ordinary, I guess, is putting it lightly. Even the revenue was down, the profits are down, yes. Everything's down. But it's been a continuous slide over the last 3 years. Are you seeing it bottoming out here?
Yes. Well, I'm not sure if it's bottoming out. It could go a lot lower. It could also go a lot higher. We don't know. All we do know at this point in time, construction shares in general and Avenge in particular are hated. People think these are bad companies and they are priced as if they're just about going out of business. In sharp contrast to the way they were priced in 2007, 2008, when there was a building boom on the go and commodities boom on the go, when the market thought these were the best things since sliced bread. Now, as always, we think the truth is somewhere in the middle. We think the construction industry is not a great industry. The companies there struggle to generate a return higher than their cost of capital. So on average, over time, they should probably be priced at around book value or the amount of capital invested in the business, because they're not worth much more than that. They have no earnings power as such. It's a very competitive industry. Today, Avenge is trading well below book value, and we think that that makes for a good investment. Poor company, but a good investment.
33 Rand 50 is the net asset value. The share price 16 Rand 58. So right, if you take that as a line, but Piet, when do you buy these shares? What time in the cycle do they start looking attractive?
Too early is the short answer, Alec. We start buying them when they get cheap. According to our numbers, around 30, depending on the quality of the business like Avenge, probably more. We need a wider margin of safety, so 40 to 50% cheap. So if the fair value of Avenge were to be, say, in the low 30s, then we'd probably start buying it at about 20, 22 Rand, which we have been doing, and we've been buying it down since then. We think it is an attractive investment proposition as opposed to an attractive business. And I think one should always distinguish between those two things. They're very different. A good business and a good investment are not always, in fact, they're very seldom the same thing. Avengers is not a great business, but we think at the current price of half book value, it makes for a good investment.
Would a good business potentially be the likes of Curo, also out with results today?
Well, that's a fantastic business, but we think it might be a poor investment. Alec, you're involved with horse racing. You know that it's not always the best horse that wins. It's the horse with the best odds that makes the money for the punters. So we think the odds on Curo making investors wealthy over time, I think the odds are quite against you, as opposed to a much lower quality business like Avenge, which has got great odds on it, and it isn't carrying a lot of weight.
Yeah, the handicapper plays a big role in the stock market as well.
Yeah.
But
Exactly.
it's interesting,
Yes.
we spoke about Avenge, and you have been buying it all the way down, and clearly at 16.50 it's a better opportunity than at 22 Rand. But one that you have got really right was Sovereign Foods. I know you liked this one when it was bombed out. We've had a trading update to show that it's really moving in the right direction now, and of course the share price has performed extremely well recently.
Yeah, it has. I think Sovereign Foods has been a good performer. It hasn't been as good a performer as Astral, I might say. Astral is a much bigger share, larger market capitalization. I think the larger fund managers get their exposure to that industry via Astral, and that's why that one is pushed up a lot higher than Sovereign. But we think Sovereign in particular is a very well-managed business. It has very good assets. And it's still priced for pretty low returns. And we think the earnings power of Sovereign is actually quite healthy over the next couple of years. So we think this one still has quite a bit of legs in it. We like the company and the management a lot, and we like the share price a lot. So it's one of those few ones where you have a good company with good management and a share price which doesn't discount all of those things. It's very hard to find one of those in the South African market these days.
Does the trading update today from Astral, which is again shooting the lights out, does that justify the share price, which has gone from 80 Rand to 200 Rand in the last, well, just under a year?
Yeah. Not really, no. I think the market's probably getting a bit carried away with that one, but it was too cheap at 80 Rand. There's no doubt that basically all the chicken producers, including Astral and Sovereign, were too cheap 2 years ago. There's no doubt about that. Astral has run a lot harder than some of the others, so I think it's probably gotten to look at the bottom line is these companies aren't great businesses. They're nothing like SA Breweries or Richemont or anything like that. I mean, they produce a commodity product, so they're not great businesses. Some of them are good businesses like Sovereign. They're not great businesses. And I think Astral is starting to be priced like a great business, and I think that's pushing it a bit harder.
We're going to talk to Michael Power, one of your ex-colleagues from your years at Investec Asset Management, a little later about Greece. I know that
Yes.
you've also made some investments into that market. How have they done, and how are you reading the whole Greek impasse?
Well, we got very lucky in Greece. When the first tremors of Greek debt problems hit the market about 3 or 4 years ago, and breakup rumors of the EU started circulating, we got involved with a couple of companies in Greece. Subsequently, they went up a lot, and our value discipline forced us to sell them. So at the moment, we have no exposure to Greece, but we're looking again. And it's these sort of circumstances which produce good investments. You know, when the headlines are bad, when the news is bad, that's when you get the opportunity to make good investments. So we're looking again. We're looking very hard at Greece again.
Looking very hard at Greece again. Maybe if you can elaborate other particular sectors or the bond market that's attractive there, Piet?
No, not bonds. We're not quite sure you'd want to own or be the counterparty to a government obligation in that case, but we'd be looking at equity investments and generally equity investments which are strong in the local market, that are good business in the local market, like the gaming company OPAP, the stock market of Greece, like, similar to our JSE there, that's a pretty good business. And then some of the businesses that operate out of Greece but that operate into other countries, so that if there were to be some sort of devaluation, they would benefit from that. So it's those sort of areas that we're exploring. We haven't found anything yet that we'd like to buy today, but our analysts are looking.